Good morning friends, I am Ashis Agarwal from NGOenabler and taking forward my tutorial series on TDS. Today I will provide you an insight into and handhold you through section 194N, that is TDS on cash withdrawals. Before going into the integrity and criticality of the section, first let's understand the intention behind the insertion of TDS on cash withdrawals by the legislation. In order to curb and discourage cash transactions, to monitor and increase vigilance on circulation of cash, and to take a step further towards cashless economy by encouraging digital payments, the provision for deduction of TDS on cash withdrawals has been inserted. So let's have a look at what the section 194N says. Every person being a banking company to which the Banking Regulation Act applies, a cooperative society engaged in carrying on the business of banking, or a post office who is responsible for paying any sum, being the amount or the aggregate of amounts as the case may be, in cash exceeding 1 crore rupees during the previous year. I repeat, in cash exceeding 1 crore rupees during the previous year, to any person from one or more accounts maintained by such recipient, with it shall at the time of payment of such sum deduct an amount equal to 2% of such sum as the income tax. Before moving further into the topic, let me explain some key takeaways from this portion of section 194N. It can be clearly understood that the deduction shall be made only if the amount of cash withdrawal or payment shall exceed rupees 1 crore in aggregate from one or more accounts maintained with that bank. It's also evident that the rates of TDS specified in this section is 2%. Since the word payment has been used instead of withdrawal, any bearer check issued by the organization to any third party shall also be covered by this section. The nature of account, whether savings or current, shall have no role, and withdrawal or payments from all the accounts shall be aggregated for the purpose of calculation of rupees 1 crore. Now let's discuss the cases in which the higher rates for lower limit of cash payments, I repeat, higher rates for lower limit of cash payments are prescribed by section 194N for TDS deduction. The proviso to section 194N talks about such higher rates and lower limits. It says that provided that in case of a recipient who has not filed the returns of income for all of the 3 assessment years, I repeat, not filed the income tax returns for all of the 3 assessment years relevant to the 3 previous years, for which the time limit of filing such return of income under section 139(1) has expired immediately preceding the previous year in which the payment of the sum is made to him, the provision of this section shall apply with the modification that the sum shall be amount or the aggregate of amounts as the case may be, in cash exceeding 20 lakh rupees during the previous year, and the deduction shall be an amount equal to 2% of the sum where the amount or the aggregate of amounts being paid in cash exceeds 20 lakh rupees during the previous year but does not exceed 1 crore rupees, or the amount equal to 5% of the sum where the amount or the aggregate of amounts as the case may be being paid in cash exceeds 1 crore rupees during the previous year. So let's understand the implications and key takeaways from the above provision to the section, because I know that was the legal language and most of you would not have understood that. The proviso is applicable to those recipient organizations who have not filed their return of income for all of the previous 3 assessment years and the time limit for which have also expired. For example, any cash withdrawal or payment from 1st April 2021, it can be verified that whether the organization have filed the return of income for assessment year 18-19, 19-20 and 20-21. It can also be seen that the proviso lays down 2 rates of TDS for such recipient organizations for different limits of cash withdrawals or payments. 2% has to be deducted in case of cash withdrawal or payments between rupees 20 lakhs and rupees 1 crore, and 5% has to be deducted once the limit crosses rupees 1 crore. So the section seems to be very clear that the TDS have to be deducted only in cases where the cash withdrawal or payments exceeds the provided threshold limits. In such cases too, the deduction should start only on the amount which is in excess of the said limit. I repeat, the deduction should start only on the amount which is in excess of the said limit, which implies no deduction should be made for the withdrawals made up to the prescribed threshold limits. However, practically we have been hearing from many organizations that some banks have started deducting the TDS from the very first withdrawal of the financial year. We completely disagree with this action of the banks. Already there are being questions raised on the constitutional validity of this section by many legal experts, since it is against the principles of natural justice. How tax can be deducted by the government on the withdrawal or payment of one's own money? I repeat, how tax can be deducted by the government on the withdrawal or payment of one's own money? And more so, such actions of the bank further raises question, as one shall not be able to withdraw even minimum cash that might be required for their day-to-day expenses if such TDS is deducted from rupee 1 itself, which is not justifiable at all. I repeat, which is not justifiable at all. Isn't this too much of hardships for the citizens of the country, especially for charitable organizations who are working for the welfare and benefit of the society? Although the provisions of this section remains questionable till the same is withdrawn or modified, one has to comply with the same, but what is mentioned in the section and not what is being practically done by some of the bankers. If this is happening to your organization as well, we are of the opinion that at least a letter must be submitted to the bank explaining them the provisions of this section and stating that such deductions from the very first withdrawal is unjustified and is causing a lot of hardships, especially to smaller organizations. Even if the historical records of past few years of the organization depicts that the cash withdrawal limit exceeds usually rupees 1 crore in a particular financial year, and taking that as the base, the bankers say that they have started deducting the same from the beginning itself, it is not a sufficient explanation on their part, because the provisions of the law are very clear and cannot be interpreted to their benefit. I repeat, even if the historical records of past few years of any organization depicts that the cash withdrawal limit usually exceeds rupees 1 crore in a particular financial year, and taking that as the base, the bankers say that they have started deducting the same from the beginning itself, it is not a sufficient explanation on their part, because the provisions of the law are very clear and cannot be interpreted to their benefit. It's the responsibility of the banks to work in close collaboration and cooperation for the benefit of their customers, so that their faith and confidence in the banking system is boosted and remains unchanged. I hope Many organizations who were not aware of why they are getting lesser amount at the time of cash withdrawal and why TDS is being deducted by the banks is now clear on this matter, and they shall be able to discuss the same with their banker. For any clarifications on this section, feel free to contact us or comment below. Thank you.